Going live now in 1 minute.
Good afternoon and welcome to the Global Energy Outlook Forum 2025. We are midway through the European section of the four-section forum, which started bright and early when you guys were fast asleep this morning in Asia, where we went through sessions out of China and Korea and Singapore and many other places, generally with a bearish tone. Oil prices generally off averaging by most people in the high 60s to low 70s. So kind of like a $10 drop in the bandwidth, the range from a year ago, general outlook for prices, low expectations from China. Middle East, though, still going to be producing all the energy it can, and not just fossil fuels, but hydrogen and renewables, and basically maximum energy on all fronts. And nuclear, of course, in the UAE energy mix already, and maybe some more on the way. So nothing stopping the continued drive of the Middle East, the Gulf states, to keep that maximum energy production on all fronts, except one caveat. Saudi Arabia is stepping back from its extra oil production capacity increases. It announced that step back last year, but UAE, Kuwait, and others continuing to move ahead. So lots of money being spent. Europe, however, still dancing between the raindrops. We've had some pretty interesting interviews. German Energy Agency, Yara and Rystad and others, and the general view there is sticking to the guns of energy transition, despite everything that energy security has to throw at it. Energy transition remains firmly in place in Europe, and Germany looking to continue its move to shut out coal now that it's also closed out nuclear. So these are some of the context that we come to this conversation on the outlook for European energy flows in a post-Ukraine war era. That's kind of the crystal ball outlook that we are taking in this session. And I'm going to start off with Boyana Achovski, Secretary General of the Gas Infrastructure Europe, and get her views on the thesis of this session, outlook for European energy flows in post-Ukraine war era, and add a little caveat question or statement on top of that, that Europe has missed the opportunity of the last 2 or 3 years in the aftermath of the Russian invasion of Ukraine to really make some permanent infrastructure changes and solutions to the vulnerability of Europe, and simply been lucky that it's been a mild winters and now we're facing something a lot colder. Has Europe missed its opportunity and so has no choice but to return to what was before if they want access to competitive energy? So Boyana, your thoughts on that thesis?
First of all, hello, Sean, and thank you for the invitation. I'm very happy to be here. I represent the European gas infrastructure, LNG operators, storages, and also pipelines in Europe. I'm very happy to be here and to answer this provocative question, although that missing opportunities, I don't know if this is the proper way to put it, and especially when we talk about infrastructure. Indeed, Europe is on a transformative journey to achieve energy independence. And to achieve this, we need to prioritize a very multi-pronged approach that addresses the immediate needs of security of supply while also building a sustainable future, right? So as you're looking for an outlook, right? So we should focus on short-term, mid-term, and long-term perspectives. And in the short term, we have successfully diversified the energy sources, shifting away from the, let's say, reliance that we were having on Russian gas. Not completely, of course, but LNG, for example, is one of a greatest solution, and LNG imports from the regions like the US, like Qatar. Also, the other possibility with the pipeline gas that it's coming from Norway are playing a crucial role. So the investments in LNG terminals and the pipelines in the infrastructure really ensure to have a secure and very flexible energy supply. So Europe currently have 38 operational LNG terminals, including the FSRUs, with a combined annual capacity of 311 BCM. So the recent additions that we have here include the 3 operational FSRUs in Germany, with 4 more under construction, new facilities in Greece with Alexandroupolis, which is operational as of 1st of October, and it's a fantastic possibility to diversify the eastern region, right, which was actually suffering a lot. Also, Italy with the terminal in Rivina, which is expected.
I don't want to interrupt you because I don't really want a list of every piece of infrastructure that is being considered in your. Apologize for that, but ultimately, what is new? What is permanently different than was before February 2022?
Well, as I mentioned, and
is there an LNG plant? We've had some floating.
Indeed,
is there any increase in capacity of storage? Can you just give me 2 or 3, or maybe what's coming this year?
So what we have in the moment is that the storage level remains very robust. We have for the moment, exactly now in January, 66% full storage capacity as of January, which is important because it will make sure that the winter and heating season is going to stay strong. There was a winter outlook from NTOC, which will say that by March, when we are going to have the end of the heating season, the storages, if there is a very cold spell, very cold, serious cold spell, will be around 40% or 30% of storage levels, right? What is different from 2022 February is that Europeans actually put, and European politicians put, very serious targets in relation to the increased capacity on deploying the renewables. You have solar, wind, and also green hydrogen projects, which are very important. And what we should remain is that while the European, vision of being very green, and a lot of the investments that we need to put in this perspective, greening the grid and also using a lot of renewables, is to make sure that the security of supply, which the infrastructure is actually providing, is very much secured.
Okay, let's thank you for that. I appreciate it, and I appreciate you taking it on the chin, so to speak. Let's go to Arne Lohmann Rasmussen, Chief Analyst and Head of Research at Global Risk Management. And Arne, if you could just sort of tackle head on the actual thesis here, outlook for European energy flows in a post-Ukraine war era. I mean, there's very strong indications new Trump administration is going to pull the rug out from under this European initiative, the Ukraine ability to fight a war against Russia. Obviously, without America and its weapons, it's a sort of non-starter. So we assume, take him at his word. What do you think European energy flows looks like the day after that happens?
I don't think that Europe will import any significant Russian gas. We have done that once. That was a big mistake, being reliant on that, but that will of course be a big issue. Today we see already very different views on this. I'm not afraid to single out the countries that are of course more Putin friendly, Slovakia, Hungary, for example. Of course, they put a lot of pressure if we get a peace agreement. Who knows, a peace agreement could also, of course, include some return of Russian gas. But I will say, as Boyana also sort of alluded to, Europe actually stepped up when the war started. There was some of the LNG infrastructure was put in very quickly in Germany. Sitting in Denmark, just north of Germany, we will have, of course, a bit concerned because maybe sometimes Germany has a reputation for being a bit, I call it slow, but a lot of red tape and so on. But they actually managed this very, very rapidly. So
I mean, that's my point I'm sort of indirectly getting to, is that Germany today is importing nuclear power from France because it doesn't like nuclear power and it's closed all its plants. It's importing coal-fired electricity from Poland. The German industry doesn't care about the energy transition. It cares about the access to cheap, reliable supply. So why wouldn't it turn to the pipelines that still connect Germany to Russia the day after any deal is done? Cheap, available gas. You need to make Mercedes, right?
In the end, it is a political decision. They cannot just turn to Russian gas.
No, of course, but the assumption that a deal is done.
That definitely there's a risk it turns out that way. The good thing is that if we look maybe 1 year, 2 years ahead, there will be much more LNG out there. LNG prices will most likely come down quite a bit. Trump coming in, the Biden ban on new export licenses will hopefully be removed very soon. That was actually a bit disappointing that Europe didn't sort of protest when that was put into place, because that is of course a big issue that they try to cap their export. But that will return. Qatar LNG will return. So I don't think when we sit here in 2 years' time, I think we're talking about a price level at a very different level. The difference to US gas price will be smaller. Even though Russian gas returns, you will still have a situation where European gas is much more expensive than domestic US gas. That is the big issue for European production, European construction. It's not construction, European manufacturing. If you want to invest, do you want to invest in Europe? There's a lot of regulation. There is probably going to be somewhat higher energy prices, however you turn it. Or would you like to go to North America, cheap energy, less regulation? That is a big issue, I think, from a European perspective.
Let's welcome Ole Hansen, Head of Commodity Strategy, Saxo Bank, into the conversation to give us that global perspective of what other vulnerabilities Europe might be facing. Is China's slowdown real? Is it good or bad news for Europe in terms of energy security? US Trump administration, drill baby drill, a lot of expectations there. Your thoughts on some of the global issues, Ole, that Europe needs to think about as it looks beyond the Ukraine conflict and energy security?
Well, good afternoon, Sean. I think there's a few things that we will have to keep an eye on, and actually the first thing is within Europe, because Germany is on its heels right now, but we have an election coming up. The potential incumbent or potential next leader has sent out some signals that are a bit more comforting than what we've seen before, and perhaps Germany can get its act together, and that obviously will increase demand in Europe over time. But in the short term, the Chinese slowdown is most certainly helping us here in Europe, because it keeps the price of LNG into Europe above that into Asia, and that's making ships more setting their sails towards Europe, and that's what we need right now. But generally, as Arne also said, in the coming years, the capacity for LNG production and export is going to continue to increase, and it will have to increase, because another big factor we need to keep an eye on globally is really the rollout on the increase in general power demand. We've seen that in China, where the demand is rising very rapidly, not only towards EVs, but also other means of transportation. We're seeing that in the US, where just a year ago they were expecting no increase in the power demand in the next decade. Now it's probably up some like 30-40%. So there needs to be built out a lot of additional capacity for power, and that's where it will be interesting whether these very low prices we have in the US, whether they can be maintained. But overall, as long as we have a wide premium or wide margin between these two gas varieties, then obviously there will be a lot of gas still coming to Europe. But so the transition towards power use and how we manage, whether we manage to get the boat steered back towards a more growth route in Europe, that I think will be key as well.
Boyana, I wanted to just touch on the infrastructure investment piece. It's not long ago that the world was moving away from permanent fixed infrastructure like onshore LNG. The floating LNG solution came not because it was, you know, something that it was a long-term solution, but it gave flexibility, and contracts on LNG were moving to shorter form, 5-7 years. The UAE renewal, the Abu Dhabi renewal before the war in Ukraine was built around a 5-year structure rather than 25-year, moving away from oil price indexation and so on. So all of these elements were coming into the LNG market. And now Europe, in this moment of crisis, is talking about sort of going back to the old model, build, you know, permanent onshore facilities, sign up to 25-year deals. In the moment, the heat of the moment, when obviously energy security is quite strong, are these wise decisions when only a few years ago the world was turning against that model? Your thoughts on that? That in the heat of a crisis, be careful what you bake yourself into.
Well, investments in infrastructure are always welcomed, right? There are bottlenecks in Europe, for sure. And bottlenecks is a missing infrastructure, for example, for countries which are locked countries and don't have an access to LNG, right? And this is something important really to consider. So also investments in cross-border infrastructure, it's important to make sure that those countries that still doesn't have a possibility to have a proper interconnectivity or to have a cross-border infrastructure, and to make sure that energy flows adapt to any kind of disruptions, is still there. So for the moment, many of the infrastructure, let's say, it's completed. There are not many projects which are having also final investment decision, let's say, in the next years. But what we are investing a lot on is also having a proper infrastructure for renewables, for hydrogen, for example. What is important is to make sure that you're making a proper use of the existing one, right? Because basically a lot of money were invested in the past years in this, and it showcased that for security of supply reasons, indeed, it was the best solution. For LNG, we mentioned already that it was fine as a best solution in a crisis situation, although that it has an impact on you know, in any case, it's more expensive, let's say, than the Russian pipeline gas. But as we talked a little bit before, you came to the discussion with the other speakers, the peace doesn't have a price, right? So it's better to really focus on that. Geopolitical situation, it's something that we will be witnessing let's say, the dimension. For sure, we are living in a very crucial moment. And I think Arne mentioned before me that Europe also needs to be very well prepared when we're talking about LNG, for example, to look on the regulation and to make it very proper for the investors of having a proper long-term contracts when we talk about LNG.
Arne, I mean, when we look at the sort of, again, the day after the change of flows, we're not only talking about obviously gas, which is sort of dominating here for infrastructure, but we're seeing crude oil, Russian crude products. Where the whole geography of moving, obviously moving from pipeline to shipping gas is very much more expensive and not so efficient, as well as moving, you know, gasoline products from east of Suez to Europe when they've got products right next door. These inefficiencies in the market that have come due to the politics of the moment, do you expect them to continue?
Yeah, I don't think that that Russian oil and oil products will return to the EU for the foreseeable future. I think when we're talking about the oil and oil product market, the price of this is relatively limited. Most of the costs are actually borne by Russia. They have to pay for the extra cost of transporting it to Asia.
They do now because of sanctions and other things. But if one assumes that those things are removed, I mean, regular business.
They will not be removed for many years. I hope not. But yeah, there might be. But of course, sanction comes with a price. Peace comes with a price. But I think the issue is much smaller for oil and oil products. It's a bit like water always finds a way, and the costs are relatively modest. It is of course a very different ball game for gas, because there's a pipeline is by definition landlocked. That's also why the sanctions are actually more effective, because it's difficult for Gazprom and Russia to transport the pipeline gas to other regions. They cannot really do that. That's different from oil, so it has an effect on the economy, which is the whole idea here. Yes, we are paying a price. We need to use LNG. LNG is a much more a global commodity, basically the same price in Europe as in Asia, and I think that's a much bigger issue, both this year and probably also next year. Is as Ola also alluded to, the global competition for gas, for LNG. That is actually a bit of a concern to me. We saw last year, 24, that Europe actually had a bit of an issue attracting enough LNG, whereas China and the rest of Asia actually stepped up import quite significantly. And as Ola also alluded to, the step up in power demand, and not just in the US, but also in Europe. So of course,
Europe's still importing Russian LNG. I mean, it's there's all sorts of contradictions in all sorts of shapes here.
Turk Stream is also running, so it's like 1/3 of the Russian gas is basically gone here January 1st. So yes, that's correct. But the power market is of course much more interesting. And there Europe has definitely some issues. We saw it here in November with this so-called Dunkelflaute, which is a period where there was no sun, there was no wind.
And I love it. What's that word? Dunkelflaute. That's a
Dunkelflaute. It's a German word. It's one of the few German words moving into global commodity markets. It's a period where you have no sun and no wind. So it means like a sort of a dark period.
Dunkelflaute. They're going to get used to that one, I think. It might be happening more often.
That was the word of the year in the gas world. But it was a big issue because
if there's bumper sticker in Texas, I would imagine. Ole, the Americans are dancing on that one, aren't they? Dunkelflaute. They're drinking champagne on that. Are we not looking at here, Ole, essentially? I've been listening to Arne and Boyana in a very passionately, nothing will change. Are we not just transferring one great dependency on Russian pipeline to American LNG? That the wisdom of that is, as we saw only a year ago when the American president stopped those export licenses, now temporarily, of course, perhaps a year, I don't know, that we have a new president. He says he's going to lift it, but ultimately demonstrating the uncertainty of even that. The transferring one dependency to another, your thoughts on that is not a solution for Europe?
Well, it is the solution that we have to live with, unfortunately, that we are dependent on energy coming in from the outside. And given the present situation in Europe with Russia, then it is obviously the only real solution, that alternative that we have. You can argue that U.S. gas companies are privately owned and probably should not be under so much government restrictions or regulations as we perhaps see from when it comes to Gazprom. So with that in mind, the flow is likely to be more economic driven than being political driven. Whether the licenses and what's going to happen there going forward, what impact that will have remains to be seen. But obviously we've seen how Trump has been trumpeting the European need to buy his energy, because the trade balance is very skewed. So that means it's probably the last thing.
And Ursula von der Leyen has more or less echoed, yeah, why not?
Yeah, that will probably be the last thing that he will try to impact. Not being able, he would like to see the increase of U.S. export to Europe. So I think it's a relatively safe source of supply. But yeah, it doesn't solve our overall problem that we don't have enough energy produced within the region.
Let's go to the survey question of this session, and then get some thinking on that, and no hurry in answering it, but I want to get it on the screen. What will be the biggest challenge for Europe's energy flows in the post-Ukraine war era? Balancing energy security with ambitious climate goals, which I think we've talked a bit about, managing geopolitical relations with the US as Europe turns back to cheap Russian gas, end of NATO, who knows? 3, addressing infrastructure and supply chain limitations. 4, reducing dependency on alternative LNG routes and imports. What will be the biggest challenge for Europe's energy flows in the post-Ukraine? All of the above, obviously, would be an answer, but which do you think of these 4 is the biggest challenge for Europe's energy flows in a post-Ukraine war era? Boyana, one of the things I was struck with by interview at the beginning of the European section here was with the German Energy Agency, that the European idea, the European solution, didn't seem to be front and center. Oh, the pipeline that was just shut off in Ukraine, that's not Germany's problem. That's whoever is at the end of that pipeline's problem. I wanted to get your thoughts on, in a post-Ukraine era, or even in a current scenario, is there sufficient solidarity, sufficient cooperation, sufficient solutions, collaboration in Europe on the solution here? If Germany's saying the closing of the Ukraine pipeline is not their problem, not their issue, that doesn't bode well for common solutions. Your thoughts on common infrastructure solutions in Europe?
I think at the end, it's a problem of many countries, right? But Europe, it's a continent which luckily works quite well on the perspective of regional collaboration and cooperation, because there was a several crises before, and we learn our lessons in a way, right? Regional cooperation is a cornerstone to having a good European energy strategy. So cross-border infrastructure projects. There are also cross-border infrastructure projects which are also about decarbonization, like Salt Hydrogen Corridor. So they're really showing the benefits of when you have coordinated efforts, when you have shared resources. So basically what is important is to have an alignment in the priorities, which requires a unified policy framework. You have here, for example, the European Energy Union, which promotes harmonized targets and joint funding initiatives. So knowledge sharing, it's something that also help as a platform to enable member states to replicate successful projects and adapt best practices. There is a solidarity mechanism which countries agree among each other, and there are some countries in Europe which signed it already to help with certain percentage of gas when there is a crisis on a different country, and also using for a certain percentage of the gas of the storages of countries which are having storages, but another doesn't have. So by fostering unity and leverage, let's say, the shared infrastructure, we can accelerate definitely the transition to, to have a certain security of supply, but also to have a sustainable energy system that ensure resilience and also competitiveness in the global landscape. And as we talk a little bit about also Ursula von der Leyen, it seems that competitiveness, it's a word that very much is going to be emphasized in an economical level on the next mandate of the European Commission.
Arne, I wanted to get your and Ole's thoughts. Again, we're coming to the end of our session. The answer to the panel survey question is balancing energy security with ambitious climate goals. That does seem to be the challenge as Germany imports nuclear power generation from France and coal power generation from Poland. But on the bigger picture and somewhat tangential, but because I have two of the greatest energy analysts in Europe on the screen, I wanted to get your outlook for oil prices in 2025, Arne, where you see the market ahead with some of the bigger macro issues around that.
I see it in the mid-70s, based on the view that OPEC Plus will not add any extra oil this year.
Ole?
Well, it's not because I'm located just 300 meters from Arne and we've been comparing notes. I'm in the same ballpark. I think that there's probably a small upside risk, especially if we start to see the dollar rolling over and start to weaken again. But 75, I think, is a fairly safe call at this time.
May I do a quick follow-up as you're both across the street? As one famous Alaskan lady once said, I can see Russia from my house. And Alaska being one of the more recent states to join the United States. What's the likelihood that Greenland will be the next one?
You want to take that, Arne?
Nobody knows. This is a crazy story, and it's of course create a lot of concern here in Copenhagen. So it's a serious matter, and it actually reminds me of something I'm trying to say before, that we all assume that Trump will export a lot of gas to Europe. It's a bit of the same ball game here, right? What if Trump says in 2 years, why should I export my cheap gas to Europe and Asia? They can just come to North America, US, Canada, whatever, and they can put their production there. That is what keeps me awake at night. I think we'll solve out the things with Greenland. I think when the dust settles, also Trump will realize that Denmark has actually been a very staunch ally with the US. We have been losing a lot of soldiers in Afghanistan, in Iraq, together with the Americans. So I think that's a bit of disappointment. How can you treat a very close ally like this?
Well, join the queue, join the list. I mean, Canada is even up for grabs, it seems. We'll have to wrap it up there. The good thing is Bulgaria is safe, Boyana. You have no problems this evening. Donald Trump, at least for now, doesn't want to take over your homeland. Boyana Achovski, Secretary General of the Gas Infrastructure Europe, thank you very much. Thank you for taking the difficult questions. Appreciate your accommodation on that. Arne, Lohmann, Rasmussen, thank you so much. And Ole Hansen, really appreciate you guys joining us here today. We're very quickly moving on to the final session of the European program. So please log off and log on to the next episode. Thank you, guys. Have a great afternoon.
Thank you, Sean.
Thank you. Thank you.
Yeah, well, indeed, that story with Greenland.
Yeah, that's a crazy story.
Good luck with that, and yeah, let's hope.
Yeah, thank you. We
It's
cross
just
our
a crazy statement.
yeah, it is. No. Take care, Boyana.
You too. Take care.